oh man, I'm going to get canceled by some people, whatever. It is the truth. When you can grow your company enough to be big enough to be friends with a king, you become untouchable. And when the king owns part of your company, your dividends are guaranteed. So that is why when you look at dividends outside of the US and Canada, you are actually going to get real returns.
Welcome to another episode of the Kinvestor Report, where I chat with industry experts, discuss the market, commodity, stocks, and the economy. As always, I'm your host, Arlen Hansen. Today, I'm excited to welcome back Fabi Lara. Fabi is the founder of The Next Big Rush, one of the most highly engaged media platforms in the junior mining space. Fabi is one of my first guests on the Kinvestor Report when he launched almost 3 years ago, and she's actually one of those investor newsletter writers that I met by walking the floors. So just another testament on why you go to these mining shows. You meet great people. Fabi, great to have you back. Welcome again to the show. How you doing?
I am doing brilliant, Arlen. How are you?
Very good, very good. Well, everywhere we turn, it's always the news about the conflict in the Middle East. And I'd love to be able to give our listeners an interview that doesn't talk about the Middle East, so we can think about good things instead of rotten things.
Good, because I don't even know what's going on anymore. I can't keep up. So you
Just
brought
a bunch
on
of
the right
just one
person.
idiot chasing after another idiot. Like that's just basically my
That's it.
my assumptions here. But so where do you think we are? It feels like we're stalling on all fronts, like with metals, in commodities, pricing around everything, but also the stocks. Stocks have stalled since January. What's going on?
Yeah, so I actually put out a video this week, which is unusual. I haven't been putting out much lately. And I was very much, involved in the what's going on with the market narrative in January in Vancouver, VRIC, MIF, etc. I was at all these events. And so I watched what the other speakers were talking about, and we kind of all had the same thematic going on. What some people might not have actually caught was that there is usually a very, very steep gap in commodity bull markets, and that is actually entirely common. We don't want to say that we hope for it, because nobody really wants to look at their portfolio and look at it go down and say, hey, here we go, on to the next leg. Like, there's always a bit of fear that you kind of miss the top and you're kind of screwed. But I was actually looking, I think it was Jeff Clark's presentation, and he actually posts, the percentage gains for every bull market in the last, I don't know how many years from the 70s. But what I noticed is that there's like 1 year gap between the bull markets, which means it's really the same bull market
Hmm.
with a down dip. And
Yeah.
I'm looking around to see if everybody else is noticing that, this is actually just one bull market. It's not two. And I'm not sure most people have picked up on it. And I think 2026 is that gap year, whether it lasts the whole year or not. I don't know, like 2008, 2009 was a gap year that I don't think was fully a year. It might have been, 9 months or so. And so if you look at what, pick your poison, commodities in general, gold, silver, uranium, whatever, what they did historically, and what it's doing now, it's that question. You look at the chart and it's like, okay, are we in the second leg of a dead cat bounce, or is this a breather? God willing, we go sideways and then, recoup. My thinking is, especially because of what's happening in the Middle East and everything that happened prior to it that has nothing to do with the Middle East, I think we go higher on most, if not all, commodities. And this will be, the tree shaking event that might leave some people out of the market for the next leg up, which might actually be the wild leg that we talk about to our children and again grandchildren someday.
Yeah, if I can interrupt you, there was a very wise man named Bob Dickinson that I do a bunch of work with, and he sold a lot of companies. He's made a ton of money and just a
Mhm,
great human being. Like nobody can say anything bad about him, and I think that's really tough in this market. But
mhm.
he said to me, he's like, Arlen, 90% of Vancouver will be out when the real money's being made. And that kind of
Yikes.
like, bull markets tend to climb a wall worry. That's like my experience. And you're right. Like
Mhm.
we have these gap years, but also like some of these corrections can be fast and furious because you're right. People get worried about missing the top, right? And so they just like run out of the gate right away because they're still up 10, 20, 30, 40, 50,
Mhm.
100%. So they don't mind selling a little bit lower or like a 20% loss from the high because they're still making money. And so they can
Yes.
justify that in their head getting out to make
Yes.
sure they don't miss the top.
And then
So
there's that big saying as well, like nobody's ever lost money taking a profit,
yeah.
which is true. However, it's not the reason why most people get into this industry in the first place. That is the really high risk end of your portfolio. And so if you're going to play it, then I think it deserves a little bit more patience and really long-term thinking. In the same way that we had to have the patience to endure the bear market, you know, playing the bull market in, it kind of rhymes with that. It needs patience as well.
I don't think there's anything wrong though too as well with taking that money off the top and then when we have these down corrections reevaluating where you want your portfolio to be,
Yeah.
right?
I
So
think it has to do with what skills the person has identified that they have. For example, I really suck at being on top of, prices on a daily basis.
like share price, like
Uh,
stock prices or like
yes,
commodity
stock,
prices.
stock prices and commodity prices just depends what's going on. I remember in 2020, like life was happening. There was all this fear mongering, whatever. Some of it was legit, some of it was just overblown. We didn't know what was going on. And I remember just not even looking at the price of anything for several weeks, right? Because my focus was like, okay, like how could I not die? Like how can I, prepare myself to not die? And I think that some people are looking at the price of oil and other topics less than what they would dedicate, for example, to uranium, which was a very hot theme in the past. But uranium has re-rated from $18 to 80 something bucks, and
Mhm.
it's staying there. It is not coming down. It's flat. It's literally gone like this,
Mhm.
corrected a little bit, and now it's just flat. Like it's a new base. It's the dream scenario for what I think some of these commodities could do in the next few years. And so, for example, knowing that, I know for a fact that if I pull all of my money out and try to time it, I am really slow at getting back in. And so I'm going to like second guess myself and then get the timing all wrong. What I do instead, Arlen, which has worked really, really well, and maybe we can tell viewers about the stuff that I've tried that has not worked, and maybe some people will find value in that too. What I find works really well is for me to think, okay, what the heck are we doing here? What is this money game? Is just numbers on screen, or is it something valuable? What is my plan with it? And so I take a step back and I'm like, okay, eventually I want to, build cash flow. I want to be in a beach somewhere, maybe 7 minutes down the road, maybe, 7 days from here. I don't know. But I would like to have it so that cash flow is just coming in and it's dividends that I don't have to call anybody for it. I don't have to do any work. It just happens. And it's an asset that I can pass on to my daughter, to her daughter, et cetera, et cetera. I want it to last a long time and I want it to be very close to hands off and unbreakable. How do I do that? Well, grow your wealth first, right? So that you actually have money to invest in dividend paying stocks. But in order to do that, you have to think that you're really doing two different things that require, it's not fully two set of skills, but it requires a different type of thinking. So what I did is, okay, while I am waiting for the next leg of the bull market, I am going to pull some of the money out because, we did reach a local top back in, I think it was January, February of this year. So I took some profits, and then I redeployed it to learning the skill of dividend investing, which sounds like the most boring thing on earth, but it's really not, because like actual money comes into your account and it's magical. It's very different to just waiting and seeing red, 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 and red for several months. But it's been working beautifully, because my thinking is, if you've done well investing, that is the world of financing, or of finances in general, saying you are above average. And people take that for granted in this industry. It is not common for self-directed portfolios to do well.
To beat the market.
To beat the market. Exactly.
I agree.
That's not normal. And so if you've been able to do that, whether it's through investing in commodities like we do in the junior miners, or whatever else it is, if you've been doing okay, if you've been beating the market, or like beating the market by a large margin, some of us have been beating the market by, like twice as well, etc. That is a massive sign that, one, you should keep doing that. But two, is that there's something that the market is telling you that you are above average at, and how can you use that for the next stage of your wealth building? Now, for me, I've pulled out money from my portfolio before and did stuff with it I should not have done. And it sounded right at the time, but turned out to be, complete mayhem. But what I'm doing is I'm looking at that money and I'm going, okay, now I am going to use my skills of buying the stuff that is still unpopular, but with the aim of creating cash flow. So the purpose of it is different. And then I bought what turned out to be, until now at least, great stocks that are dividend paying, but that have also gone up in value in the meantime. And so I'm super happy with that, because I'm already, working the two areas of, while I'm waiting for the next leg up, and I'm still invested. I have taken some of that, but to still invest, except with the dividend, the passive income kind of angle. And I sleep well at night.
Yeah, I guess, well, I'll tell all our listeners that if you're watching your stocks on a second by second basis and not being able to sleep at night, that you're probably
Not a good sign.
investing in the wrong thing, because that fucks with our nervous system. And when our nervous system isn't in great alignment, we're anxious, we make bad decisions, they're fear-based decisions, they're greedy decisions, et cetera, et cetera. So take care of your nervous system, number one. Make sure we're breathing. Okay. Make sure we're breathing. 100%. Make sure we're sleeping. So stop the things that stop you from breathing and sleeping. Right. So that's investing in things that you don't get worried about. Start there.
Yes.
100%. Agree with you. And I really like that strategy, because during that time of sideways, we tend to make silly mistakes, because you want to put your money to work. You want to put your money to work. And if you only know the junior small cap market, what you're doing is you're putting your money to work in things that are going down or sideways, and they're very difficult to hold on to, and et cetera, et cetera. Meanwhile, if you are putting your money into investment like dividend stocks like you're doing during this time, they're still liquid. So when the signals in the junior market are back there saying, okay, next leg up, here we go, we're going to see 30, 40, 50% on the TSX Venture Exchange, at least you can get out of what you're in the dividend paying stocks and reallocate back to those high torque things, if that's what you want to do.
Exactly. Yeah. And you got a lot of room for, moving stuff around, and just, you can actually do a little bit of both as well. So in the dividend portfolio, what I did is I asked myself, because I kind of cannot run away from this way of thinking, what's not hot yet, right? Like that's what we do when it comes to junior mining. Like, what is going to be the next thing that becomes hot, and you want to catch
the next big rush.
The next big rush, yeah, the big move. And so I bought mostly two things. I bought oil stocks before the war, right? Maybe 3 weeks before the war. That was great. The other thing was that I saw that the dollar was getting weaker. And historically, in a cycle, when the dollar starts to get weaker, EMs start to catch on. So emerging markets will probably be a theme in the next, call it 2, 3, 7 years, however long this lasts. And I kind of happen to know Brazil as a country very well because I was born there. And I sometimes would unite the two themes. So about the local oil company, Petrobras, but also just I want to kind of remind, maybe not remind, because I think most people haven't heard of this before. There are some people that will shy away from dividend stocks because they're boring. Boring meaning that they don't yield enough to actually make a difference to your portfolio. I'd like to challenge that thinking. And this thought came to me from understanding how emerging markets work. We call it emerging markets because it's sexy. It's when countries want to sell themselves to investors, right? They're really third world countries. And I can say that because I'm from it.
Yeah.
Third world countries, this is how it works. If you can grow, oh man, I'm going to get canceled by some people, whatever. It is the truth. When you can grow your company enough to be big enough to be friends with a king, you become untouchable. And when the king owns part of your company, your dividends are guaranteed.
Mm-hmm.
So that is why when you look at dividends outside of the US and Canada, you are actually going to get real returns that will make a difference to your portfolio. One, because when you get a massive company in Brazil, in Colombia, in South Africa, all the countries that you think are red flags because of corruption and other problems, I'm sorry to say, but the corruption is actually a reason why those big companies work. They don't let the little guys win there. And so those companies become untouchable and their dividends are almost guaranteed, especially because some of them are partly owned by the government and the government wants to get paid. So
That is a great
works.
idea. I
It
like
works,
that.
man.
It does work. Yeah, for sure. So I want to actually I'm a big believer that anything priced in US dollar is going higher, right? Like any commodity priced in US dollars, and I think 99.99% of them are priced in US dollars.
Yes,
So yeah, uranium, copper, nickel, you name it, anything priced in the US dollar is going lower because the US dollar is going to be going lower without a question. That's like the 25-year-old chart you can't
fact.
ignore. Fact.
Yeah.
But do you think there's anything kind of standing out in particular right now for timing at all that like could be the next big rush? Like I know we don't have a crystal ball. My God, it can be so difficult. Back in January when silver was 120, everyone was saying it was going to 300 tomorrow,
Yeah.
right?
um,
So let's.
exactly. You know, something that is kind of weird right now. I hadn't looked at the silver price for a long time and I look at it again and I was kind of taken aback because I didn't expect it to be this high
It's
from,
it's
a high
held.
of 120 down, but then it is now at a level, and this is what the 21st of April, 2026. It is now at a level where producers are making money hand over fist. Like
Do we
I
know?
was
Do
at
we?
an
But do we know
yeah,
that
go
yet?
ahead.
Do we know like with the price of oil and like the inflationary pressures they've seen over the last quarter? Like, and I like,
I, I I
have we
think I
seen any
think so.
financial statements in this new environment to show that they're gushing cash?
Um, no, but you can kind of can do a back of the
Napkin.
napkin math.
Yep. Yep.
Just look at how much their of that of their costs is tied to oil, and you tack on, whatever, a 50% increase if you want even.
Yeah.
It doesn't really
Move the needle that much.
budge. It,
Yeah.
it doesn't
Okay.
it doesn't really move the needle, not to that extent, because I mean we're still talking 70s here.
Yeah.
Um, most of these guys can probably make good money in the 50s.
Yeah. Yeah. Fair enough.
So yeah, they
So make a list of
silver
silver
producers,
producers. Are there
silver producers,
any silver producers paying dividends?
uh, not not big dividends. Nothing that I would be excited about.
Okay.
But it's something to look at. And I think that the whole theme of silver is going to come back into vogue. with a vengeance, just because silver speculators are wild, man. Like I thought uranium
The silver apes.
investors were, yeah, I know exactly. Like uranium investors are crazy, but silver investors are just very religious about the whole thing, and so I think that could come back. It's a religion.
Yeah. Yeah, the uranium investors are crazy. The silver investors are religious. Yeah, that's a perfect way to put
Yes,
it. Like they're the gun stackers. They're the ones that are like building bunkers at the
yes,
back of their house and like
yes,
calling on
exactly,
Jesus to save
exactly.
the world, right? Speaking of uranium though, let's talk about that. Like what has happened to uranium? Like I would think that during this conflict and the spike in oil
Mm-hmm,
prices that
mm-hmm.
uranium would have responded, uranium stocks would have responded, but they've done
Yes,
nothing. So
they've
what do you
done
think's behind
nothing.
that? Like Lobo Tigre is saying like uranium's the place to be right now. Kind of agree with them. No one's really paying attention, but like why do you think it's lagging right now?
Nobody's paying attention. The way I see the uranium market right now is it's a game of musical chairs where there is a person standing in the middle with a bunch of chairs around them. The person in the middle is the Sprott Uranium Trust, and they're removing chairs as the
Hmm.
fuel buyers are dancing, and the music hasn't stopped yet, and they haven't really counted the chairs yet. That's the way I see it. I because of the whole re-rate. Like I remember when the price was $18 a pound. People thought that some mines that have actually started producing again in the US would never come back into production.
Yeah.
And who we are. Not saying they're making money at these levels, but they're producing. That's another matter.
It's just a quick side question. When it was 18 bucks a pound, were you losing sleep then?
No, no, because I don't. Here's the thing. I don't put enough of my portfolio in anything that I can lose sleep over.
Okay, good.
So that's just the principle that I follow. And it's financial advice that Fabi is giving everybody who's listening to right now. You can like sue me over this if you want. Don't bet on margin. Like, do
Ever,
not over lever yourself.
ever.
I was offered a margin account yesterday, and I'm like, I would rather not even have the opportunity. So thank you.
I'm gonna guess that that was like a transactional broker that hasn't had many transactions this month that's looking to try to make some more commissions for their firm. But that's
No comments.
just
No
a
comments.
wild guess. Okay, so this clearly becomes like a stock picking time. Like you got to do a lot more homework, a lot more DNA checking, right? Like like last 6 months, previous January, throw a dart, you're selling it and making money. But now it just is not like that. So what's your checklist when you're looking at some of these companies?
Well, if I'm looking at the uranium sector in and of itself, I this is a company that I discounted previously, but I would look at Chemical.
Chemical?
I would look at Chemical. It's the boring company, it's the big company, but it's the producing company, and I would maybe take a look at it for a small position, not for that to be the moneymaker, but for that to be the bellwether so that you know when the market is taking off again. Because you don't want to only depend on the very large, at least I don't want to depend on the very large companies for all my gains. I like to play in the smaller caps, but I want to know where the money is coming from and how fast it's traveling, and so the money doesn't all of a sudden come into sub $10 million nano uranium companies. That just doesn't happen. It first goes
Hmm.
to the Chemicals of the world, then Denison and Paladin and all that, and then it trickles down usually, unless there's a massive discovery, and then you become one of those large companies. But that's the exception, as you would know, Arlen.
Hmm.
And so I always want to know, okay, where are we in the market? But the price of uranium itself, that would be something to get exposure to. And it's something that I have to do with my portfolio because I am over levered towards one particular company, but it's because I sit on the board of it. And
Okay.
so it's different because I can actually influence the outcome. But If that wasn't the case, then I would try to get more exposure to the price of uranium itself, because like I said, the fuel buyers, it has played to their advantage that none of them have pushed the market or pushed the price to where it would be unsustainable. And they have played their cards extremely well. They
Mm-hmm.
have done a great job at what they were hired to do, which is to make sure to secure uranium into the future at a price that is reasonable, with security being more important than the price, by the way. But I don't think that they have enough moving forward to protect themselves from any of those other fuel buyers getting a little bit greedy or scared of what the future might hold. And so a lot of the pounds that we see are already in China, going to China, promised to China, and that flow is going to leave a lot of companies in the West chasing and fighting for ever more
Pounds.
expensive pounds.
Pounds, yeah, yeah. Speaking of that, actually, like, has there been any major high grade discoveries in the basin since like the ISO and the next gen? Or have those been like the two bellwethers still? Like, I just haven't seen
Of
anything that size and
of that
scale.
size, I would even say I like ISO was really the last of,
The last one.
yeah.
The
I
grade on
mean,
that thing. The
F
grade
three,
on that
if
is crazy.
exactly, it's insane. But I mean,
Yeah.
F3 did make a discovery. I don't think it has, at least for now, the size of the
Hmm.
others.
Yeah,
Yeah,
yeah.
to be determined.
Yeah. If we were to look in a year or 2 years from now, what do you think will be the biggest surprise in the market? And it's hard to predict surprises because that's why they're called surprises. But
Yeah, I'm gonna guess. I'm gonna guess nobody's gonna do this math, okay? And nobody gains anything in doing this math. But if somebody could actually figure out how much money went into the Athabasca Basin, um, for a total of like 10 years and what that has become from a discovery perspective, I think people are gonna be pretty ticked off.
oh, like how
Because I
much money
think
actually went into the names and then
and
how
how
little was discovered. Oh,
exactly.
100%. Well, that next gen
I
discovery was found on like the southwest side of the basin, right? And that was because that was side of
mm-hmm,
the basin hadn't been picked over a million times already,
mm-hmm,
right?
that's it. Yeah.
So yeah, no, I agree with you. There's very little discovery per dollar spent in the ground for Athabasca uranium. But like, and that's why if you talk to Roger at Homeland, who is a client, I own stock, I get paid.
He's
That's why
brilliant.
he's so brilliant. And no wonder you work with him, or I work with him. But he just talks about like the cost to enter the basin is so
Mm-hmm,
expensive, right?
mm-hmm.
Yeah. So, anyways, enough being said on that. That's an interesting take. I like that. I like that. And if you had to
Yeah.
build a watch list today, what themes would dominate it?
It would be always
Dividends.
gold and silver. Yeah. Well, the thing with dividends is that I don't really build a watch list for dividends. So the way that I make a decision toward dividends is literally, this is going to sound like a joke. It's 100% legit. I go to one of the AIs. ChatGPT has been crap these days. So I go to either Grok or Claude. And I'm like, okay, I am looking at dividend, high dividend paying stock in this sector. And it needs to be a sector that I think isn't super sexy. Because obviously I don't want to buy at the top, even though it's for dividends. I don't want to buy anything that's highly valued. I want to make sure that I get both the dividends and a little bit of stock growth. And so I'm like, okay, of this sector that I've already, figured is not really sexy right now, such as, well, oil a couple of months ago.
Hmm.
Also chemicals. Haven't looked into shipping because shipping is like even more wild than mining. So I'm not sure I have the time to learn shipping. And then I ask for suggestions and I go broad. I'm like, okay, give me stuff in like wild countries. Give me, South Africa, give me Brazil, South America, all over. So yeah, and it spits out a few different companies. Obviously, then I go and check the numbers behind it to make sure that the forward going PE numbers look right, and then I just buy it. really.
Okay.
I don't really
All right.
wait for a good entry point. I just buy it.
Yeah, yeah, fair enough.
But watch list wise, I always watch gold and silver
Silver.
because they kind of dictate the sentiment of our
Yeah,
industry.
I agree.
I would add to that. What is the talk in the kind of like really exotic stuff? I kind of want to know where lithium is sometimes. And so I go on Twitter for that and check out what lithium is doing. If people are talking or not talking about lithium, tungsten has been exploding lately and it doesn't seem like it's going to go anywhere because of the conflict. And so sometimes when something like that pops up, I like to watch it.
Mhm.
But when it pops up as a thematic, it's usually somewhat late. And so I'm always asking myself, okay, what's the stuff that nobody's talking about? I haven't heard
Mhm.
anybody talk about nickel for years.
Oh, somebody just did the other week actually. Brandon, what's his name?
There you go.
Brandon Bergallo, or is that his name on Twitter? He's got like a
I'm not
10
sure.
billion Twitter followers, and he's like a
Oh,
commodity guy.
I
Um,
think Brendo Balo.
Thank you. I think
Yes,
so. Yeah.
yes.
He
Brendo
brought
Balo.
up a nickel chart the other day. I was like, oh, here's something
Yeah.
that nobody's talking about. So
Exactly.
that's funny that you brought it up.
And
Yeah.
so I like to look at the stuff that most people aren't. It's like it's either the stuff that actually dictates sentiment, like gold and silver, and the stuff that nobody's talking about. Anything in the middle. I don't really look at copper very much at all. I would rather look at copper companies rather than the price of copper, because to me, the price of copper has so much. I don't want to say speculation, but it's kind of like there are so many financial players involved in the price of copper, that whether it's going up or down, you look at, are we going to have enough copper in order to just maintain the infrastructure and lifestyle that we have today without any sort of growth? I think it's pretty clear that we cannot sustain it as is, even if you ignore growth components. And so then you got to ask yourself, okay, where's it going to come from? I'd rather look at what companies are going to be able to find deposits that are going to be sellable.
Mhm. So
I
you're talking
prefer to
about
do that.
like potential discoveries, or are you looking at someone who's made an early stage discovery that looks like it could be sellable?
Both, like A-Mark, for example,
Okay.
prime example of that.
Gotta disclose as well because it was mentioned
Yes.
client owned stock, paid for, blah, blah, blah. I'm adamant
Yes.
about making those
Yes.
disclosures as soon as they're made. But
Yes.
I have to agree with
And
you. That is a hell of a discovery.
yeah, it is a gorgeous discovery. And so I would look at that. I would also maybe look for companies that are focused on large scale discoveries such as that. I have a partner of mine called Latin Metals, and
Yeah,
they are onto such systems, and they partner up with companies, whether they're
yeah.
majors or producers, explorers, whatever, to go and dig up the rocks and
It's,
drill.
it's almost like the prospector model, except you're not
It
selling off
is.
your assets. You're actually bringing in partners, and it takes a quality
Yeah.
of like a quality of team, a certain level of team to be able to do that, right? Like
Yeah.
I think you can build an asset, one asset, but to build multiple assets to bring in multiple partners, that takes a special team of
Yes.
the type of
Yes.
assets that they know and understand
Yeah.
what majors are going to be willing to put money in. It's just not one great big hole. That's not what
Yeah.
majors want,
Exactly.
right? They want to see
Exactly.
longevity. They want to see long life assets. They want to see safe jurisdictions. They want to see
Hmm.
forever mining, right?
Exactly.
And
And that's not easy. It's
it's
rare.
not easy to have it all, like the power, the water, infrastructure, like the indigenous people behind you name it, right? They
Yeah.
need a whole slew of things that
But
so
when they
yeah, no, I like
find
that.
it, they're
Yeah.
willing to pay a lot of
100%.
money for it.
100%. Yeah, I know the lap metal story. That's a good one. So, 'cause that's the model that they're doing for sure.
Yeah.
Have they made a discovery yet?
They have made a discovery, but it needs to be followed up on,
Okay.
because the whole reason why the company came to be actually is they had a discovery hole, which was one of the best holes that year for copper. And I think it was 2018. It was like 300 meters of like, economic grade. Nobody cared about it. And they're like, what the heck is wrong with the market? We need to change our business model completely because we're going to dilute to high heavens if we continue down this road. Let's, instead of that, bring a partner in, let them spend the money, and then we'll keep a portion of the project, and let's focus on getting projects with the same kind of potential so that we can get most of the upside. So yeah, they are drilling right now, if I'm not mistaken. And there's lots of news coming from now until like the end of the year.
That's one of my kind of ongoing jokes I'd say with promoters that call me when they have a porphyry target in British Columbia. It's like you need such deep pockets, even once you make the discovery on this thing. It's almost like like a porphyry discovery is almost like a blessing and a curse, right? Because it's like, oh, it's exciting, but man, you need another $100 million. So good luck unless you've got huge pockets, some sort of district scale opportunity that can even be bigger than what it is, right? So
somebody needs to foot the bill, and that's not usually a junior.
Yeah. Cool. Fabi, I've taken up a lot of your time today.
No,
But it's
a
always
pleasure. I love talking about these things.
Yeah, the market's in a really weird place right now. Like the headlines just every day, it's about the war right now, right? So it feels like we're in a sideways pattern. I loved what you talked about dividends. I think that's brilliant. I like that we talked about don't go in margin and don't own stocks you lose sleep over. Right? This is crazy. But I get it. People get hungry and they tend to. I think the problem with investors, a lot of investors, is like they see that the 5 or 10% of people that can do really, really well in this market, and then they want to become that person. It's like being it's like being an OnlyFans girl. Like they only make like the top 1% make all the money, and all the other girls want to become an OnlyFans girl.
That's it.
It's ridiculous and horrible.
Perfect analogy.
Yeah, there you go. And with that being said, Arlen being inappropriate again.
There's only ever one prom queen, right?
Yeah, exactly. Anyways, thanks so much for your time joining me on the show. You can stay up to date with Fabi through her website, thenextbigrush.com. You're also on X, the old Twitter, if you don't know what X is anymore. And if you haven't already, be sure to subscribe to our channel, follow us on social media. And in case you missed it, all our presentations from the 2026 Kinvestor Mining and Energy Conference are up on our channel. So if you are looking for ideas to be in the space, these are some ideas that are curated by me and my team that we think kind of offer some good opportunity. Fabi, thank you.
Thank you so much, Arlen. See you next time.
Yeah, bye-bye.